A very good evening to you all, friends. I'm Sanjeev Singhal, Central Council member and chairman of the Auditing and Assurance Standard Board. This is the third year in succession that the Honorable President ICAI has given me this responsibility of chairing the Auditing and Assurance Standard Board. Friends, after a successful last council year, wherein we have done 161 programs on webinar and on a virtual and a physical mode, we have started the this year on a right note. This is the sixth program overall, second webinar and fourth physical programs that we have done in this council year, which has started only 15 days ago. Rather, the committees were formed only about a week ago. Friends, on my behalf and on behalf of my Vice Chairman, CA Vishal Bhai Doshi, I welcome you all to this webinar of Auditing and Assurance Standard Board on risk assessment and responses to assessed risk. Friends, audit is the backbone of our profession. Audit is the exclusive area which is there for the chartered accountants. And one of our past president, Dr. Devashish Mitra, has said that audit is a serious business. We must gear ourselves. If we are auditing, if we are certifying something, we must make sure that we have completely satisfied ourselves regarding the authenticity of the documents on which we are putting our seal. Friends, it's of utmost importance to all the stakeholders. And it is very important that we assess, that we do a risk assessment and form responses to the assessed risk. What does it mean? In simple term, suppose you undertake an audit. अनिल जी, आपके पीछे से बैकग्राउंड नॉइज है, इसको जरा वो करिए, तो म्यूट पे कर लीजिए. So if you're starting an audit, do a risk assessment. What that would mean? Suppose you're auditing a media company. You will see what kind of risks are there in that industry. And then what kind of risks are there in that particular company in which you are auditing. So identify those risks. Do a risk assessment. You will identify some risk would be low, medium, high, very high, etc. So accordingly, categorize those risks. What will happen? If you identify those risks, you will be able to lay down greater focus on those risk area. For example, if you identify that revenue is a fraud risk area, which generally is, then you will be able to design your audit strategy so as to see that how do you address the same while doing audit so that your audit risk is minimized. Because when you are giving your audit report, you're also taking a risk for giving a wrong opinion. So it is very imperative that you minimize your audit risk, and that will happen once you have done the risk assessment and develop a right strategy for addressing that risk. So it's very, very important. So this webinar, I am sure, which is taken by our very, very eminent chartered accountant, C. Rajiv Saxena ji. Rajiv bhai, I know him. From the last 2 years, he has been a special invitee of the Auditing and Assurance Standard Board, and he's a partner with a very, very large firm. Has a very rich experience, and along with him, it is C. Ruchi Maheshwari, who has rich industry experience and now working in a altogether different area apart from the practice. She is also into Radio Dwarka, so which is an entirely different venture, where she interviews people from various walks of life, so as to provide motivation to the members at large and the non-members as well. And this session will be moderated by 4 of our esteemed young and experience. It's a mixture of young and experienced members, CA Vipin Khatri ji, CA Shubham Garg and Isha Garg from Amritsar. Of course, now they are in Gurgaon, and CA Mansi Goel. So it's a very good mix. If you see, the diversity ratio is 50-50. Out of the 6 speakers and the moderators, we have 3 women chartered accountant and 3 men chartered accountant. It's been our endeavor to give a platform to the new speakers. In fact, last year we have developed more than 150 speakers through the programs of Auditing and Assurance Standard Board, and the entire AASB staff, and especially Anil Lalji, deserves a deep round of appreciation for the same. And friends, I am sure that these programs will help you in effectively discharging your duties as an auditor. Friends, besides these capacity building programs, Auditing and Assurance Standard Board has also been running two expert helplines every year, one on the bank branch audits and second on giving responses to the statutory audit queries, which are non-bank. Uh, we plan to do the same this year also. And last year we have also brought out two very extremely useful publication. One is auditing standard checklist, and second is the working paper templates. Apart from that, we also brought an implementation guide, a revised implementation guide on audit trail. So I'm sure that the members will be immensely benefited from the same. In case you have any suggestion for some of the topics that we should take through our webinars or seminars, please do reach out to us and we'll be happy to incorporate that in our calendar. So thank you very much for your continued patronage. And with this, may I now invite our moderator, CA Vipin Khatri for his opening remarks. Over to you, Vipin.
Thank you, sir. Myself, CA Vipin Khatri. I'm a practicing CA in Delhi, not part of it. And I welcome you all the delegates, especially Chairman Sir, Mr. Sanjeev Singhal, and Vice Chairman Shri Vishal Doshi ji. And as you all know that today we have gathered for this webinar on risk assessment and responses to assessed risk. That is mainly we'll be covering SS 315 and 330 over here. And as you all know that this webinar has been organized by our Auditing and Assurance Standards Board of ICAI, which is conducting regular webinars regularly in this part. And this is our 6th webinar in the current council year. 2 of which this is the second webinar, and four we have already held in physical form. And overall, in last year we have around 161 programs which we have covered. So I look forward to having a very wonderful session this time. And for this, I welcome Mr. Shubham, who is also my co-coordinator, to proceed with the meeting.
Thank you, Vipinji. Thank you so much. At the outset, I would first like to welcome you all, and I thank Chairman Sir and Vice Chairman Sir for giving me this opportunity. During my articleship days, my specialization had been in statutory audit. So this area is of key interest, and I really hope that all the participants and the viewers benefit from this. I would request all of you to pay good attention to the speakers, find good value in the delivery, and please feel free to ask questions that you have by the end of the seminar. In order to begin with the proceedings, I would first like to introduce our reverend speaker, C. Rajiv Saxena ji, who is a chartered accountant and a partner with S.N. Dhawan and Company LLP. Over his 24 years of his career, Rajiv ji has handled and advised on numerous engagements on matters relating to statutory audits as per the Indian GAAP, Ind AS, and tax audit as per the Indian regulations, project management and implementation, finance under USAID, audit as per IFRS and US GAAP. He has a rich experience in international assignments, including development project audits conducted for European Commission, audits of World Bank aided projects, and has exposure to due diligence and business valuation engagements. He has been a member of FRRB subgroup in 2018 and 19. Rajiv ji is presently a member of ICAI study group for SQM1 and SQM2 and SA 220 revised. So Rajiv ji, welcome to the webinar, and I hope the participants are benefited from your delivery. Now I would like to welcome CA Isha Garg ji to my co-moderator to take the proceedings forward and introduce our second speaker. Thank you, everyone.
Thank you so much, CA Shubham Garg, for giving this thing. First of all, I would like to thank Chairman Sir, CA Sanjeev Singhal Sir, AASP of ICAI, and CA Vishal Doshi ji, Vice Chairman of AASB of ICAI, for giving us this opportunity to be a moderator of this webinar. I would also like to welcome all the participants and our guest speakers to be here. So our second speaker is CA Ruchi Ji Maheshwari, who is a chartered accountant with over 25 years of extensive corporate experience in the domain of banking and financial sector with Indian and MNC organizations. She has held senior leadership roles at American Express and Royal Bank of Scotland and expertises in the field of corporate governance, encompassing areas of internal control, surveillance, auxiliary compliance, risk assessments, process and thematic audits, financial accounting reporting, etc. She has experience in areas like project management, accounting, financial management, MIS, and operational risk. She has also acquired a number of process certifications like Six Sigma, IFRS, PCOAB, etc. during her corporate career stint. She has always had a flair of learning and exploring new advancements, technologies, and has worked in implementation of robotics within her prior organization. She moved out of her corporate profile in 2019 to turn into an entrepreneur and set up her risk consultancy, RPMG Risk Consultants, which supports companies on their internal audit implementation, evaluation of risk framework, etc. She's also working with a tech partner to create a chat GPT tool which would support companies for their ESG reporting and strategy building. As a strategic partner to a digital platform, she has taken up an initiative to spread financial learning to help support people around their personal financial well being. She strongly believes that learning is a continuous process which evolves us, so we need to keep learning and sharing. So now I would like to call CA Ruchiji to please share her knowledge on SA 315.
Thank you for the introduction, Nisha. It's really nice, and I really appreciate the kind of good words that you've said for me. Thank you very much, and really thanks to the institute for giving the young chartered accountants and experienced also to kind of get this forum to be able to talk. And definitely, Anil Lalji, Sanjeev ji, and the institute board has always been very supportive for us to come forward and display our knowledge and learnings that we've had on a practical purpose. And I think, Sanjeev ji definitely set the context quite well on the webinar today, because this session, as we all know, as things are changing and has, like the world is changing in terms of bringing more compliance towards, and the focus from an auditor perspective, it's important that we all focus on the kind of review that we do as auditors, the reports that we issue. So we definitely need to understand the importance of our work. And I'm sure you all know as chartered accountants that how planning, execution, documentation are very key aspects, not only to say that the audit has been done well, but also to kind of remember that even after years, if you have any kind of a review being done either by NAFRA or any other institute on the work that we've done, even in terms of peer review that's being conducted. So definitely there's a lot of focus, there's a lot of scope of improvement. And today's topic is maybe quite close to my heart, because I've been doing a lot of risk assessment, both from as a business side and also on the other side as a chartered accountant while I've now started. So I've played both the roles. So I've been on both sides of the table in my career as a chartered accountant. So it's definitely a great opportunity to share my learnings, and I look forward to have good questions so that I get puzzled on my, or I get quizzed on my my knowledge. So I look forward to questions. I'll just share my screen to start with the presentation. We're going to talk about SA 315. Let me share my screen once. Okay. Is my screen visible? Can you just confirm? Okay.
Yes.
Thank you very much. So what we're going to talk about, as we all know, is about SA 315, which is identifying and assessing the risk of material misstatement through understanding the entity and its environment. I think before I really get into the auditing standard, one thing that I want to know, want to understand, or maybe share with all of you is, I think in today's time, doing a risk assessment on every aspect is very important. And I'm sure you all will agree that whenever you take any decision in your lives, whether you even took a decision of whether you're going to pursue chartered accountancy as a career, I'm sure there was a decision making that you did, right? There was a risk evaluation that you did in terms of what was your choice, what was good, what was bad, what you could have done as an alternative, or if you were taking it, what were the things. So, that kind of a risk assessment methodology has always been there in our own personal lives in some shape or form, but we may not really call it as that, But today, I think over a period, we've, the auditing standards or the accounting standards that have come are just trying to re-emphasize on those facts and give you a more clearer picture. So, when I've done my CA in 1997, at that time, we did not really have the auditing standards. But I think it's a great thing that over a period, these things have developed. These have become easier for our younger chartered accountants. It's helping us in terms of charting out our way and all of that. So this is a very critical, and because the opinion that we give as chartered accountants, it matters in terms of the work that we do. It showcases what we are giving a reliance upon, and hence to make and I heard that Sanjeev ji did talk about audit risk, and as we all know, audit risk is the risk that we may not give a wrong opinion, or we are not really certifying the right financials because the financials had some issue or all of those things. So the reason why I'm talking about it is that, the risk assessment is not something new. It is just that we now are emphasizing and we are making sure that this thing has been assessed for what reasons, right? And at what stages of your audit planning, programming, why do you need it? So I'm sure you've heard about risk assessment even at the planning stage, initiation stage, and that's SAIS 240, which talks about all of those, which is important. But what's more finally important today is I'm going to limit myself to SA 315, and we're going to talk about this thing. Here, this essay very clearly talks about the scope that it says it has is that this standard actually deals with the auditor's responsibility to identify and assess the risk of material misstatement in the financial statements through understanding the entity and its environment, including the entity's internal control. This is a very, bookish thing that I'm reading out, but there is a reason to read it out, because this actually encompasses everything that we need to do. And all these essays, practically, if you just read the scope and you really identify the key items of it, it makes your life simpler, right? So, for example, I've highlighted a keywords here, which is like, what is this essay saying? It's saying about our responsibility, an auditor's responsibility. Responsibility to do what? To identify and assess the risk. Because I may identify a risk. Say, for example, I'm just going out somewhere. Suppose I have a flight tomorrow. So I may just identify the risk that I may not get up in the morning to catch my flight. But am I assessing that risk to say, okay, I have identified a risk, but what about the risk? Will that risk really convert into an actual happening? Or am I putting the necessary controls and I know how material it is, or how good it is that, is that really a key risk to me? Is it a significant impact that it may have to it? So therefore, that assessment of it is important, because if I know that it's an assessment, if the assessment actually gives me that it's a significant risk or a key risk, then I may have to work upon it to either tone down that risk or see that how I can cap that out. So if I take the same example of missing my flight, so I've identified the risk of missing my flight. What will I assess on it? I will assess that why could I miss the flight, right? Either I've not got up on time, or I've got up on time, but my cab didn't come, or all of that. And then I put my controls around it. Or I have people around me to tell me that I have to wake up at a particular time. So maybe having an alarm is a control around it. Asking my mom to wake me up so that mummiyan uth jati hai, isliye, just as an example, she becomes my control around it, right? So that's another part. So therefore, even in an audit, when you are taking, when as an auditor, we're taking, doing, or taking an engagement of an audit assignment, it becomes our responsibility to understand that what are the material risks that can prevail in a financial statement, not only identifying them, but we also assess them in terms of how material they are. Is there something that is too material for me to even be averse from really taking the assignment at the first go? If I've taken the assignment, then how do I go about it, right? And then and how do I do it? how do I know that there is a material misstatement or possibility of a material misstatement? Could be because I need to understand the entity as a whole, its environment, and also its internal control. Why it talks about the internal control, we will talk about it as we go forward. But what I'm trying and saying, these are the key things. And I'm sure when you break up a couple of your, as it said, if you have a bigger problem, you break that down into smaller ones, then is understanding the smaller bit becomes easier. So here, same thing in this case, again, in this auditing standards, that's what we need to do. We need to understand what's our responsibility, what is it that we have to assess, what's a material misstatement, when do we call it as a material misstatement, and definitely how do we do that. Okay, those are some of the key things that we're going to discuss. Okay, I am just going to read the key points of the essay so that we really understand it quite well. Objective. The objective, as we know, is the objective of the auditor is to identify and assess the risk of material misstatement. But now the bigger thing is that it's not that we have to think and identify the risk of misstatement only because of an error. Normally, that's what we talk. But here, when we are taking our responsibility as an auditor, we have to be careful about the possible frauds that can happen. Right. And again, when we talk of the fraud, so one is error, which we normally say it was just a human error. But why are human errors happening as an example? That's also a question. And is that error such a huge error? And can that spread across or multiply in terms of quantum? Right? Something that can be controlled, something that can be go beyond, which that magnitude of the error may go much higher. Right? So that's one thing that we have to consider. The other thing is also about the fraud risk that we talk, is there some kind of a fraud that may be happening within the organization, which as an auditor, I need to understand that am I able to manage that? When I say manage that, that whether as an auditor, I am able to identify that and see its impact on the financial statements so that my reporting or my opinion on the financial statements is correct. Okay. And the biggest thing here is because we've talked about, and I'm sure I started on, you all know that there's a concept of internal controls of financial reporting. Here, the limit or the extent that the auditor has to go is not only at a financial statement level, but also at an assertion level, right? Which means that you have to drill down and, look at the class of a transaction or the account balance or a disclosure. So it's not that whatever is just coming to my everything will end up to the financial statement, but end of the day, I need to do it to a ground level. So it's an end-to-end assessment and identification of material misstatement that as an auditor we have to take care about. Okay, so that's like the scope and the objective. Some assertion, definitions, I'm sure you know, but we'll just quickly go through it so that we understand them. And it's, I definitely feel that the more we did, and I'm sure we all agree because we've, done our questions and answers while we were doing our CA multiple times, only then we remembered things and we were able to kind of display that in our actual examinations and then clear the examinations. So same thing, the number of times we understand these essays, whether it's auditing standards or the accounting standards, the more we read, the more we keep reading and rehearsing on all of this, they kind of get stuck into our mind. And then they kind of just becomes, as I say, it just gets into your blood over a period. Because अगर आप ये इस चीज को रोज रोज करोगे, एक discipline बन जाएगा, एक आपकी habit बन जाएगी, and then it's your blood, and as I say, for me, risk assessment is in my blood because I've been doing it for now, more than a decade now, I can say. So even मुझे नींद से उठाओगे तो I would ask the same thing, so that's how I feel it. Okay, coming back to the definitions, assertions are nothing but, as we all know, which are the representations by management, whether it would be explicit or otherwise, that are embedded. So basically, I'm sure you all know the assertions that we talk about, the completeness, accuracy, and those assertions that we are talking for the that we need to consider so that there is no potential misstatement that may occur. A business risk, a risk resulting from significant conditions, events, circumstances, actions, or inactions that could adversely affect an entity's ability to achieve its objective and execute its practice. In today's time, there are simple examples. If I have to say, so business risk, right? If I'm running my own business, I think the biggest example as a case can be, and I think it's on top of everybody's mind, is the Paytm Bank, right? The biggest risk for the Paytm Bank, which has now become, is their non-KYC compliance of RBI regulation. And that is what is the biggest business risk for them. Now, because they did not comply to some one of the small activities, if they would have done from day one or the period that they got, the business would run as usual. But that's a big business risk that they've done. Or we could just take, sometimes it's only a business risk of, say, for example, um, so travel industry, as we all know, right? The travel industry was booming, everything well, but COVID happened. All of a sudden, nobody traveled. Airlines closed down. Hotels closed down. All your fancy, recreation centers, hotel industry, restaurants had to get an impact, and that's the situation of the business risk. So anything that's going to impact the working of a company is called a business risk. I'm running today as an organization quite well, but something that may impact my working, whether in a particular location or as a complete strategy, that could be that is what is business risk. Okay, internal control. Internal control is the process designed, implemented, and maintained by those charged with governance management. So it's a very bookish language, but what I mean to say is anything that is designed at a process level, which the business actually, or the management and the processes define themselves, wherein they kind of look at um, what is it's like where your risks or the processes that you've identified have a risk, and how do you stop that risk, right? Or how you safeguard on your business processes is what you called as risk, or as you call as controls. So anything that helps you stop the risk or prevent a risk to happen is a control, right? That we all know. So here the internal control is about the processes, and this includes not only your financial controls, this also includes operational controls, right? And regularly your operational controls and financial controls have to be reviewed for design effectiveness and operating effectiveness, because situations change, processes change. There are key triggers that happen within an organization. So, for example, if you have high attrition in your processes, which means there is a risk of risk of the knowledge not being transferred, which means that there is a potential challenge or a potential opportunity of a bigger loss that may happen. And that is why you have to have controls to be able to manage your attrition, as an example, or have controls or SOPs and documentations which may help you manage the potential risks that may come in. Now going on, so risk assessment procedures, we are going to talk about them in more detail, and I'm going to just skip it out from here because we'll talk about it, and risk assessment is a key aspect of this auditing standard. So we'll have to kind of go into detail around it. Significant risk. So again, any risk that has been identified and assessed, risk of material misstatement in the auditor's judgment requires a special audit consideration. So anything that you feel is so significant, which may need you to do an additional review around it, cover more samples as an example, or maybe go out and reach out to any specialized, specialized partner to give you more data, around that thing. So, for example, um, let me say that because I come from a banking sector, the biggest risk at times, the significant risk is about the trader's risk, right? Where as an investment banker, or when you're looking at investment banking risks, you find that there could be a possibility that your trader was not really following your policies. And there have been a couple of trades which have been off-market trades, which have actually exploited or have been a different value. So that would be a consideration, and the auditor may want to see those kind of trades and understand that why such an activity happened and how significant is the impact of that issue that will have on my overall judgment that I am doing. And in those cases, the auditor may want to take some special uh, or additional scope of scope under review of audit. So those factors need to be done. Again, this essay has been effective from all audits that have happened from April 2008. So that's the whole genesis or details of the essay. But I think now let's go step by step down to understand that what really are we wanting, what's really the requirement, or what the auditor needs to do to understand and implement this SA 315. So first thing, definitely we've been saying that first the auditor needs to do a risk assessment procedure and all related activities to understand that what is the level of risk that is there for which he may have to be concerned while he's giving his opinion, right? Then he will need to understand the entity and its environment, right? And I'm going to talk about it as we go, but I'm sure we all know that whenever we're going somewhere or we're dealing with somebody, even in today's time, if you're meeting some new person, the first thing we would do is professionally, we may go to LinkedIn and find the person, right? Even before having a first conversation, we want to know about the person so that we can comfortably have that conversation. The same thing when we're talking about an entity, we need to understand that entity, we need to understand in what it is operating on, and that's why it's getting knowledge about it is very important. Once we know about what are those things, then it's important to get into understanding what's the entity's internal control. And why it's important, because if the organization has put good internal control mechanisms, which means that the management is concerned and already evaluating or stopping a couple of the risks, right? And their results can help me as an auditor in my own assessment of the risk assessments that in my assessment of the risks that I would do for my own evaluation, right? Then I have to also identify what is a risk of material misstatement, what level I'm giving it, right? How much is it? Is it material enough? Is it significant enough? We've talked about special audit, considerations that may be required. Again, there could be some things that may require my current processes that I've thought about may be insufficient, and that could also be a risk. And I may want to kind of go beyond my defined scope, and that's where I will look at what are those areas, what are those things that are insufficient for me, and should I get into kind of getting more deeper into some areas. Those are things that I'll do. And then based on all of the initial steps that I would do, I will need to see whether I need to revise my risk assessment, right? So on the scale of significance, because definitely if I have all the high risks, right, and when we do a grid of materiality and significance, I think that's where I will need to say that I can't live with all high risks as an auditor. So I will need to bring those risks down. And that's where I will work on terms of how can I bring those risks down, right? What will I need to do in terms of, so if I've, we're going to talk about it, but I think we all know that there are inherent risks in each activity that we do, right? And if those inherent risks are high, then I will need to see that what are what are the control mechanisms that have been built in, which I will evaluate through the earlier processes that I've talked of in this slide. And then I'll say that, okay, Now, because these activities are giving me comfort, I feel that I can revise my risk assessment and I can scale down my risk, or I may bring down the significance of that risk. So maybe it's not a high risk at the moment, it's a medium risk. Or maybe I've lowered down to kind of bring it at a low risk level. And then that's something that may be within my risk appetite, as an example. And I feel I'm comfortable because I have some other compensating mechanisms to help me understand that my risk at the moment is not, something that scares me. I have my audit well under scope. So where the audit that I conduct will definitely lead me to give the right opinion, and I may not have any audit risk in the future based on the workings that I'm doing. Hence, there's a revision in the risk assessment. And finally, and foremost in today's time, not today's time, I think in all the things, what's important is documentation. And I think I've mentioned it, and I actually heard it from somebody else, but now I kind of repeat the same. Is if you've not documented, which means you've not audited. That's how is the method or the rule that is being applied in today's time. So documentation is very important. Keeping a record of all activities that you've done. So all things that you've done and all the steps that we've talked about earlier is very important. What were your risk assessment procedures? If you've done any kind of a discussion, the documentation on that, everything has to be there. A good filing about any audit and your review is a key to give comfort to any of the reviewer who comes later and questions you on your work as an auditor, or even for you after a year maybe, or maybe if you want to again review the kind of work, or maybe teach your team in terms of what things were there, a training mechanism. Documentation is very, very key. So that's the summary, and I think I will go down in terms of the details. And just being cognizant of the time, I will be rushing through, but I think I will not leave anything which is critical. But definitely, if you have questions, you can keep coming back and asking once I'm done with it, so that we can pick up questions from you. And I don't want to steal away Rajiv Ji's time, so that's the reason I'm just taking it forward. Okay, so now we've talked about risk assessment. I've touched upon these aspects while we were discussing in the earlier slides, but I think now we'll just go a little more deeper so that we understand these much, much better, and we can implement them as we go forward into our daily activities that we do, or maybe work up with our teams when we are talking to them about their risk assessments, procedures that are being followed by them. Okay, so one key thing for us is to understand and identify any risk. What we'll have to do is we'll have to do a risk assessment, right? As we said earlier. But what is a risk assessment, right? Risk assessment is the identification and evaluation of several aspects of an entity through which risks are identified and evaluated for use in guiding the audit procedures that will be necessary in order to substantiate the amounts reported in the financial, right? So I think I've mentioned that earlier also, that if for us to identify, risk assessment is the best way, right? You have to risk assessment will help you to identify. Maybe as a process level you may identify risk. You may identify risk based on the financial statement level, understanding which are the key accounts which are contributing to the most to your the key accounts, as we say, right? And you may understand that what really is the risk in an account. So for example, very easy example is accounts payable, right? We say that accounts payable is a key activity, and it's important for us to know that if the payments done to the third parties, or related parties also, or any of those, what are the risks in it? Am I making payments to my related parties only in the business, or maybe I'm making payments to people uh, you know uh, I'm just being cognizant that, I've put in an SOP which says that there should be two level of scrutiny on my payments if it's beyond a value. Say, for example, any amount which is more than 10 lakh rupees has to go through two levels of review. But I've been seeing that all the payments that they've been going to around, say, 9,90,000. And why that's happening is because they just want to go away from a two level of authentication. So that should ring a bell to me and say, okay, that's a risk. Why is somebody doing that? Is there, is there a fraud method? Maybe there's a collision being happening between the finance guy and the guy who's maybe having say, for example, business development, and we're just seeing that all business development bills get passed only through one level of scrutiny, and that's because they are not following, or they're breaching the 10 lakh limit, and that's why they're passing it for 9,90,000. So which means that there could be actually that yes, the spends are only being at that level, or the other option could be that the finance guy and the business development guy have collided together, and they have a fraud intention, and they are actually doing it to circumvent the process that we've put in. So that should give me a trigger, and that's a risk that I identify. That I will evaluate and understand whether this risk that I've identified based on my evaluation, is this a fraud risk? Is this a process risk? And how much is the impact that it's going to happen in my financial statements? And how am I going to see what were the necessary controls? And should my auditing procedures include something more around these activities, right? Or maybe I need to also look at the compensating activities, like, say, for example, a bank reconciliation, or uh, BD, the business development budget analysis process also could come under my review, so that I can make a complete assessment and the uh, you know right opinion on this whole process. So therefore risk assessment becomes very critical to me. Okay. What is that level of risk that I have to see? I think I've mentioned that even earlier, that when we see the risk of material misstatement, we don't have to look at it only at a financial statement level. We also have to look at it at a class of transaction, or an account balance, or a disclosure level. What does that mean? So something may not be material at an account level, or at a financial statement level, right? But I see that as a class of transaction, that is not really working right. So just because if it is not material at a financial statement level wise, should I leave it away? No. At the same example, as I said, circumventing a policy it may not have a huge impact at a financial level, but it may have an impact on the class of transaction. It may throw light to the nature of the people within the organization, the behavior of people, the culture that's been set in the organization. Because the tone of the culture of an organization is also very, very important in understanding the risk assessment, right? To understand the risk that may prevail in an organization. Okay. We talked about that the risk of material misstatement, the components that is there is about inherent risk and the control risk. So what it does mean is inherent risk is a risk that exists in the process as is without any controls, and control risk is that I have a control in place, but that control may not be working as it is designed. So we have to look at it at both levels. So is the control that has been designed to reduce the inherent risk, is that happening? Is my residual risk that's left later is within my appetite or not? So those are things that will have to go in my whole process. I just can't look at things very individualistically. This whole thing of risk assessment procedures really tells us that we will have to understand things holistically. मैं silos में चीजों को देख के I can't decide that I am good, right? There could be something in, say, for example, while you're doing your risk assessment, you may find in a particular, if you're doing an audit of a company which has multiple factories, right? And maybe, say, for example, 5 factories and in different locations, you may not find issues or risks maybe in 4 factories, but you may find a risk that may be there in one of the factories. But you will have to see whether that risk is something that can be, leveraged at another level. Will the combined risk or the probability of the same happening in some other place could be possible? That's not showing up, but maybe that's coming up there. So, we have to look at it holistically. And therefore, when we talk about this step, we talk about risk assessment procedure and related activities. We don't only talk about risk assessment procedures, right? And here, when we're talking about risk assessment procedures, we will talk about how do we do it. It's about inquiries that we do with people. It's about even sometimes during your desktop audit, maybe just looking at comparative financial statements. You may find that this is something which is not really falling in place. As an example, when you may be just seeing the 3-quarter data, you may just see a slump in some quarter, and you may be surprised that why is this slump happening, or maybe a boom or a zoom, in terms of values in some specific quarters, which gives me a trigger. Again, I may be looking at some other conversation which I may be having with a management personnel, which may not be really a part of my risk assessment procedure, but that may give me a trigger to think, okay, when I evaluated the risk assessment, did I really keep this in mind? The number of interactions that, for example, if the organization that we are auditing has a lot of government kind of work, then that definitely becomes a risk that, is there any kind of passbacks that's happening within that industry, as an example. Is there some way that money could be siphoned? Or maybe in today's startup world, as an example, if you're auditing a startup, as an example, the biggest risk that is there is, and I think the investors also always want that kind of support from the auditor to understand whether the money that they gave, was that being used in the right ways? Was that not being taken away? So in when we're doing a risk assessment procedure, it's not only about a conversation. It's about a complete, keeping your eyes and ears open for everything. Not only you as an auditor, but your team members, your team, your engagement, your whole audit team that goes out and works with people. That's something that we will have to consider and keep that in mind. And again, you could do your inquiries either through surveys, as an example, at times, because if you want to kind of get data from various branches of the entity, maybe the key branches or a non-key branch, and you can't really physically visit there, then even having in today's time, sometimes we've had Zoom meetings with those people, or maybe sending some Google form questionnaires or surveys to them to kind of gather information and get data. Again, your observation of the way the things are being recorded in the books, you may be seeing a trend that why are, say, for example, there are some purchase, say, for example, assets are being purchased, but they lie in the work in progress account. They're not being capitalized for long, as an example. That also may be giving you a trigger to say that there could be a possible risk in that. That why is the capitalization of assets being delayed? Or while you're doing your own analytical procedures of data, or your other things, that's when you may identify that there could be a potential risk that you may need to consider. So there are such things that need to be kind of reviewed and looked at. Okay. So as we said, risk management is not a once in a time activity. It's not that at the start of a assignment is when you do a risk assessment and then you close the books and keep it. Only when you kind of complete it, that's when you look. No, your risk assessment has to go on regularly. If you find anything, because when you do your risk assessment at the start, maybe at the time of planning, maybe at the time of actually identifying your scope of audit and various other things. That's when you may do your first level of risk assessment to assess the risk. But over a period, when you are actually doing your activities and you may find something potentially high or significant, you may want to go back and circle around and look back at your risk assessment procedure. Maybe sit down and redraw your risk assessment and see whether there is a change in terms of materiality that may happen. So it is a continuous activity, and we'll have to look at it accordingly. Again, going on to the next step, which is important, is understanding the entity and its environment. I did touch upon it earlier. I think it's important that when we are looking at a risk assessment, we need to know that what this entity is into, right? Um, I like giving examples and anomalies. So I think the biggest example is if you're traveling, say, for example, to Europe for your family trip or a vacation or whatever. What will you do? You will first find out about Europe, right? Which countries are you visiting? What is the weather there? What is the kind of food available? Will you not fall ill because the weather is where, because you know what needs to be packed, right? You find out in terms of the food that's available. So if you're a vegetarian and you know that, if you have you will not get vegetarian food example there, then what do is, as a backup, you keep up some stuff so that you can survive while you're there. So similarly, it's important to understand the entity. You need to know which business this company is into. So if it's a cyclical business or it's a FMCG business, so whatever the business is of the company, you need to understand, because that will give you an idea. So if it's a healthcare industry, you may want to kind of compare it with the other healthcare companies that you've done as an example, which will give you an idea. So it can't be that, say, for example, if I'm sure all of us are chartered accountants and we may be doing a lot of reviewing the stock market. So today, as we all know, that there is a PSU rally that's going on, right? Which means that all PSU companies are performing well. So if you see a single PSU company, which is listed on the stock exchange and maybe have not changed an iota from a pricing perspective in the last 3 months, then definitely it's a question to you to say that all my PSU stocks are running. Why is this PSU stock not running? Is there something wrong, in the way that the company is operating? Is the work not, so those are things that you will evaluate. So similarly, when you're taking or doing a risk assessment, you need to understand that what is this entity into? Is this is this entity or the company that you're auditing is in line with what the market situation is for the same end, right? Is it really if your company which you're auditing is into losses, while if you see other listed companies within the same sector, you may find they're all progressing, they're all getting good growth. So what's not going right for this company? So definitely understanding the entity and its environment is important, because that will also give you triggers. It will also give you reasons to understand that what could be wrong in the financial statements. Is there that they are getting good orders as a company, but maybe they're not able to execute, and because of which their or their quality of product is not good, and that's why that's a risk. Which means that if you're seeing a downward trend in the revenues, it makes sense, because definitely there are a lot of complaints coming to you. We've lost a lot of customers in this sector. A lot of orders have been cancelled. So these are the things that will give you triggers, right? And therefore you can then understand that whatever data or information that you're getting, it's right, it's not forged, it's not made up. Anything around those things is what you can definitely comprehend and understand. Okay, then about understanding entities, internal control. I think I did mention that earlier, and I think I'm recapping on what, or maybe going a little more detail in terms of what we talked about. is the objective of internal audit, as we all know, is to ensure that all the transactions or the activities are being performed as per what was defined as per policies, as per SOPs, as per the framework that I laid down, or as per what the management had defined. So it is basically saying that internal audit is the first level of control mechanism that's built in by the management. The management lays out its first level of control, and it says, before any auditor comes, it's my own responsibility towards my company, towards my stakeholders, towards my investors, so that I am ensuring as a management that the books of accounts or the date or the information that's being recorded is all correct, right? There are no chances of errors. So you may also want to have to look at the internal control framework that's defined by the company. You may want to have a meeting with the internal auditor of the company. If the company has an internal auditor, then you may want to see his or her workings, their findings, because that will also give you some bit of an idea in terms of the risks that prevail within the company, right? And want to see the level of depth the internal audit has been performing, right? And based on the comfort that you get from the internal auditor, you may decide whether you want to go deeper. You may maybe decide that there's good work done around a particular matter, and then you may want to skip that area because you don't feel that there is any risk of material misstatement because there are good audit procedures, internal audit procedures that are there. So that's also very important to understand. And that also gives you what an idea in terms of what's the tone at the top, right? Because, we all know that if the management is good in terms of putting the right principles, putting a right culture within the organization, then definitely it will flow down. It can't be that, management is wanting something else while the people or the employees are doing totally different. That can't be possible. So we will know the kind of interest management has put in within the organization by understanding the entity's internal control mechanism. Okay. Again, identifying and assessing the risk of material misstatement, very, very important. It's important because we need to identify risks through understanding, as we said, all of the things that we've talked about earlier, and also looking at it at the class of transaction, account balance, or disclosure. We have to assess and evaluate that risk and see if they relate to the financial statement as a whole and potentially affect any of the assertions, any or many of the assertions. So even if it is affecting one assertion or number of assertions, it will be something that we'll have to be deciding upon, and the materiality will depend on the same thing, whether it is significant and material for me to give an adverse opinion, right? Or maybe qualify my opinion as an auditor. Because, anything significant, if I've missed as an auditor, it shows that, I've not done a good work. So definitely assessing that is important. And as I've always, as I said earlier, it's also important to consider the likelihood of the misstatement and the magnitude that could result in a material misstatement. So I'm sure we've all seen that, the grid that we say, high risk, high probability. So the likelihood and the magnitude is very, very important. And we need to have all our risks at the lowest zone as much as possible. That's what we need to work upon. Again, what could be some of the areas or the considerations if the risks are significant? What because of which I may require a special audit consideration. So if the risk is a risk of fraud, right? Fraud is something intentional. If there is an intentional fraud and that was not identified by the management or the internal control procedures, which means that there is a challenge, right? Which means that those triggers were not picked up, and which means that the internal control mechanism was weak, and hence we can't rely upon it. And therefore, I may need some special audit aspects to be considered while I'm doing that. Okay, if the risk is related to recent significant economic, accounting, or other development changes, or maybe at times even, as I call it, these are more like your trigger points. If there are trigger points that you're getting, as an example, if you were moved from a manual system to an automated system, right? It is a big risk that your system may not have incorporated all those aspects. Yes, coming from a manual to automated is always positive, and I'm sure you might be thinking that what is she saying, because an automated environment gives me more safety, right? But here the question is not that. Here the question is that when I'm moving from a manual system to an automated system, did my system or my as we say, information, IT controls, did I look at all the IT controls? Did I see the mapping of all the controls? At times as an auditor, you have to do a couple of dummy entries also and see whether they're hitting the right mapped account, a classification, were the classification or the journals that were posted were going into a right head, were they not going erroneously into any other thing? Or maybe if you've created newer, say for example, you were on Tally earlier and you've moved from Tally to SAP, and that's also an aspect that we will need to understand and see whether that's something which is which needs a special attention. Anything there has been any kind of diversification in the business strategy that's happened, that's also a requirement that you will have to see. If there is any merger or an acquisition that's happened, then that's a special activity which may need a special consideration, and your risk evaluation may need a special understanding. So anything unusual, anything significant, anything something which is a little bit away from what's happening, or something that's very complex, a transaction, for example, is going 5 different ways and then hitting your ledger, which means why this complexity is being created, why are we beating around the bush and then completing our transaction? It could be it's just to kind of uh, take you away, or maybe it's being done uh, just to kind of age accounts. I'm just moving the transaction so that I don't show that I have long aged debtors, as an example. Or maybe my liabilities are less should not show that I have long outstanding liabilities or debtors, and that's why I'm just complicating my transaction. So those are things that may give you a requirement for a special audit consideration. And again, as we said, the risk assessment is a very dynamic activity. It is something that you may do as and when you get more data, and definitely during the course of your audit, if you find information, then please go ahead and revise your risk assessment and look at it whether any change needs to be done in terms of your scope, in terms of the procedures that you're following, and then revise and re-update your audit plan and procedures accordingly. Last and not the least, again, very, very critical, documentation. Kaam karo, lekin likho nahi. Again, not good. We have to prove that whatever we've done has been, I've been able to substantiate, document, and share that this is what I've done. अगर मैं सारी बातें कर लूं और मैं कुछ लिख के दिखाऊं ही ना, then again not good for me. And I will not be able to prove later on that how did I maybe give a good opinion, or maybe I gave a qualified opinion, or maybe I had an adverse opinion for whatever I am doing, whether it is the documentation of the whole process is very, very important, right? It also for your within your teams, if you have different opinions, it's a good healthy challenge. This is what is there. This is just something that I've showed as an example checklist. For every risk that's identified, You can kind of create a checklist. You may say what are the considerations that you did, how did you find out, what were the assertions that were affected, completeness, valuation, accurate, whatever you want to kind of say. What's the control activity? How much did it come out? What's the likelihood? What is the type of risk assessment procedure that you did to understand on this risk? So all of this is what you can kind of document, save, and just have a record of your data. So I guess that's what I had to cover on my slides. So thank you for giving me this opportunity, and I guess I've been able to answer or explain the points. Any questions? I'm happy to take them.
Firstly, I would like to thank CM Ruchi Maheshwari ma'am for sharing her insights and her rich expertise knowledge on SA 315. Thank you, ma'am, for your valuable time. Further, I would like to request you to stay with us till 6 p.m. so that any other further question from the participant can be resolved. Hello?
Yeah,
Ma'am,
thank you
am I
very much.
audible?
I think it was really an opportunity for me, and I think I'm very passionate on this subject, and I'm sure my speech could have resonated that because I kept going and going and going. So thanks for it, and I will definitely be here on the program. So if any questions, I'm happy to take them even after the session by.
So we'll start with the question and answer round on SA 315 right now, ma'am.
Okay, we can go ahead.
Yes, ma'am. So, ma'am, it's my first question. That, ma'am, as you were talking about special audit consideration, we all know one such AGI is related party transaction, right? Up, hello.
Hello, I'm sorry, I
Hello.
missed you in between. Maybe my.
Yeah.
Can you come
Yeah,
back
ma'am.
again on the.
Yes, ma'am. Ma'am, we were talking about special audit consideration part, and we all know one such common area is related party transaction. Right. Apart from this, which are other common areas which are short require this special audit consideration. Firstly, I need to ask this, and apart from this, how can AI tools like Chat GPT can be beneficial in this area?
To answer the first question, that as I think I gave some examples while I was explaining, is anything that becomes unusual or something which is giving too much of a value should actually give you instances where you feel that there's a special audit requirement, special audit procedures that may be required. And as an example, if there are any mergers, demergers that has happened, any takeovers that you've done within the organization, right? Or maybe a hive off of your business unit that's happened, or something. Maybe there's been any kind of a loss that has happened, or maybe a new gain that has been significantly come in an organization. Then those are any unusual activities, any key activities that are not behaving as per the numbers or the trends that are there. Definitely require special audit procedures depending on the materiality of that. So that's the answer to the first question. And the second question is definitely yes. There are a lot of tech tools that are now available and important to be used into, I think. So for example, Chat GPT, as we say, Chat GPT or GPT, as I would normally say, is a very critical aspect because it helps you evaluate and go through a lot of humongous data. If you have humongous data, you can just use GPT to help you kind of clear through and shred through that data and give you what you really want. So, for example, if you have 1,000 pages of information and you don't know what needs to be picked up, then definitely you can put it on a GPT tool, and the GPT tool will give you the crux of what you're wanting and may highlight the pages on which that is there, which becomes simplifying the way of your analysis that becomes. So these tools definitely help you in terms of better analysis, in terms of reducing your time, in terms of spending on looking at this. So for example, if I have to read 1,000 pages, I may take weeks to do that. But if I use a GPT tool on it, I may do it in hours. So time saved is, money earned is what I always say. So yeah, that's.
One more question, ma'am. Ma'am, how to measure risk and audit of identified risk in case of forensic audit? This is a question we have received from the participants.
Right. So forensic audit, as we all know, is actually a forensic audit is an audit for a specific nature of a transaction or an issue that we are going through, right? And it's a deep drill and an end-to-end, action. And we all know that forensic has to be built up. So basically, from the first step to the end step is what the whole chain of activities is listed out, and that's where we can go deeper in terms of what is there. So the risk assessment procedure in a forensic audit always helps to identify that in the whole process, like from start to end, which are the critical things that may be the ones, so basically your prioritization can be done basis risk assessment procedures. When you know in the whole forensic audit system, in the chain of the activities, which are the key activities that may have the largest impact on my finding. And that is why I will go into those aspects first. And that could be, you could use analytic tools. You could use, your discussions and with or inquiries with the management, discussion with the process owners on whom this forensic audit is being done. And then you can get into details.
Thank you, ma'am. Ma'am, now I would request my co-moderators to ask any other further questions from ma'am.
Hi, ma'am. Thank you so much for your wonderful session. But I would really like to interrupt in between and request you to wait till 6 p.m. and then we can start our second leg of question answer round. And I would like to call Rajiv Saxena sir for his insights on essay 330.
Sure.
Thank you so much.
I hope my screen is visible.
Yes, it is.
Yeah, so thank you so much, Isha, and thank you, WASP and Chairman Sir, for giving me this opportunity to, participate in this webinar. And I must say, Ruchi ma'am, you have explained the risk assessment in such a very practical and simple way that I believe all the participants will be benefited out of that actually, because you really gave examples from practical life to correlate with the process of audit. So that was very I would say lively session, and I'm sure participant will be benefited out of that. When we're talking about risk assessment, as Ruchi ma'am has covered, what is the importance and what is the necessity of a risk assessment. I think she mentioned that she qualified in 97. Coincidentally, I also qualified in 97. So I understand how we used to do audit in those days. So risk-based audit approach was introduced, maybe 2 decades ago, maybe a little more than that. And why it was needed, because the way the businesses were growing, the size of the businesses, and maybe the timeline were squeezed in terms of completion of audit and publishing the results to such a great extent that probably if we don't have a risk-based audit approach and if we still want to do a 100% audit, it is practically not possible. And at the same time, most of the stakeholders don't see any value of doing or engaging into that kind of audit practice. So we have to follow a risk-based audit approach so that we can only, kind of consider the risk of material misstatement, which might change the decision which might user of a financial statement may take by going through or using those financial statements. So any any information which has been misstated and that may change or alter or modify the action which a user might take, whether it is an investor or a banker or maybe a customer or a supplier, then probably those are the risks which we carry while we doing audit. So so risk-based audit approach is kind of a necessity for the current business world. I will cover, these areas, key audit steps and overview of risk-based audit approach, which largely has been covered by my previous speaker in a very, I would say, comprehensive way. I will also talk about the standard which deals with the risk assessment, and then SA 330, because then I would like to give you my, my from my own personal experience I have seen, because I have been member of FRRB or maybe FRRB subgroup, and in many ways I have been involved to reviews actually, and I have seen many a time that many of the auditors definitely do a risk assessment, and they create a risk assessment docket or memo. But when it comes to using that risk assessment in the actual execution of audit, many a times we see there is no link established. And I will give an small example. For instance, there is a company which is a cost-based company. All the costs are billed to a customer with a markup. It's an asset-light company. There are no huge assets on the book. Everything is on lease or rentals, and only some small asset, maybe in terms of office furniture or printers and stuff, things like this. And in your risk assessment, you do conclude that PPE is not something which is there is a huge risk of material misstatement at the financial statement level. But when we get into audit and you look at your work paper, look at your time spent on each of the area, we see that you have spent maybe more than enough time on PPE. I can understand there are some specific requirement on PPE with respect to Caro reporting. So to that extent, you will have to do still certain procedures, but that should be it. But when we say look at the file, of some of the audit files, and then we see when we try and correlate the risk assessment with the work performed to address those risks, we see that there is a work which has been done which was not necessary as per the risk assessment. Having said that, I think some people do take a view that we have done an over audit. So what is wrong in that? That can be a view, and most of the time it could be true also. But having said that, the regulator is not looking at it that way, because we have multiple regulators like NFRA, peer review board, quality review board. Maybe if you have listed client, SEBI also can ask for a specific review of certain files and stuff like that. In case of banks, RBI can ask for a review, and they have started inviting auditors to discuss their audit approach and risk assessment and the responses to that. So the point which I'm trying to make here is that if you are trying to suggest that we have done over audit and what is wrong in it, so you have limited time only available with you, because everything is time bound. If it is a quarterly review, everything has to be published, concluded within 45 days. If it is year-end audit, 60 days is the time which is available to you. So if you spend a lot of time on those areas which have not been assessed as risky, or maybe having significant risk of material misstatement, then it is very likely that you might not have spent enough time on those areas which were actually risky and where you should have spent most of your time. So I think, and it becomes very difficult to demonstrate that we have actually spent required time at those areas which were having significant risk of material statement, but at the same time we were left with enough time, and we spent more time on those areas which were not risky at all. So in terms of SA 330, what we are going to cover here, I mean, is common to 315, and documentation always remains the key. So first of all, some key definitions, and then overall response to the risk assessment. Sorry, I needed a glass of water. I'm sorry. So overall response to your risk assessment, audit procedure, which are adequate, or which can adequately respond to risk of material misstatement at the assertion level, adequacy of presentation and disclosure, evaluation of and sufficiency and appropriateness of audit evidence, as Ruchi ma'am also covered that unless you are able to demonstrate that you have done enough procedures, you have enough evidence in your file, to be able to arrive at the conclusion which you have arrived, whether it is a clean opinion or a qualified opinion or an adverse opinion. How have you substantiated? It is, in case of a qualified opinion, the documentation has to be more robust, but how pervasive the qualification was, or the material misstatement was, or the matter was which required a qualification, how you have concluded that, and whether it could have been a adverse opinion also. So all those onus of proving your appropriateness of your opinion is always on the auditor, and that's why the sufficiency of and appropriateness of audit evidence is very important. And last but not the least is the documentation. Needless to say, I will have to repeat what Ruchi ma'am said, that if you have not documented enough, or if you have not documented your actions and your audit responses, the regulator and anybody, any stakeholder would say that you have not conducted the audit. Moving on. So what are the key audit steps in an audit? Maybe which are some of the repeat, and you'll have to live with that. Maybe, and I'll tell you why this is important. So initiation of the engagement, which include the acceptance process, knowing your client, knowing doing the concluding the KYC, media attention and stuff like that. Obtaining an understanding of entities. Some of the understanding you can have from the information in public domain, but a lot of information is obtained when you start interacting with the client and those charged with governance and those who are process owners, visiting their various plants and various activities. Preliminary analytical review and collection of financial data. Risk-based audit approach, which is the subject matter of today's webinar. My previous speaker has covered 315, which is actually a risk assessment, and I'm covering the response to those assessed risk, and which is covered by SA 330. Audit planning, audit procedure, formal procedure required by law, finalization and report, and archiving, which is a very integral part of audit, because the regulation says, or the SA says, that you should archive your file, and it should not be available for any further changes within 60 days from the close of the audit, from the sign of the financial statement. If it is a digital file, or if it is an automated file, or paperless file, then the tool has to have that functionality. And if it is a physical file, then it has to be kept in lock and keys, with a very limited access to that kind of archiving process. How does the risk audit approach or risk-based audit approach look like? So I will just quickly share. So how do we make sure that the audit procedure are adequate, or they are helping us to provide the reasonable assurance? So risk that entity's financial statement may contain a material misstatement, which we discussed, or a risk of material misstatement. And where is the audit risk? Audit risk is that our audit procedure failed to identify or detect such material misstatement, and we sign or issue an audit opinion with those misstatement remaining undetected. So that is the audit risk. How do we address that? That's what have been discussed in the risk of material misstatement, or risk of risk assessment for audit material misstatement. But how do we create a response to those risks? That is what we are going to discuss here. So I think this we have covered. What is audit risk? Risk of issuing a wrong opinion where there is a material misstatement and which remains unidentified. If your inherent risk and control risk, which has been described by my previous speaker, where are assessed as low, if you consider that inherent risk is low, the environment or the class of transactions which are relevant, the risk is not high, or even not moderate, it is low. Controls are very robust. You have been able to test the design of the control. You have been able to test the effectiveness of control, existence and effectiveness of control, and you also assess or conclude that the control risk is also low. Then your detection risk is also become, I would say, moderate because both the risk and then probably the response in terms of audit procedures will not be as substantive as will be required in case of a high inherent risk or a high control risk or maybe where both the risks are high, then probably your detention risk has to be really, really, really low, you know. So, which means that you have to perform substantive procedures. Maybe if we talk about some large contract where you get a signed contract from the client and you are able to review it. But if you really feel that control and inherent risk are very high for reasons for which you have identified them as high, then you might have to do alternate procedure by going back to the third party who has signed that contract and get the confirmation on some of the key terms which are relevant, for the purpose of confirming the appropriateness and accounting of those financial transactions underlying that contract. So the audit risk model has two objectives. One is to limit audit risk. Audit risk is a function of inherent risk and control risk and detention risk, as we discussed. So if inherent risk and control risk are very high, then your detection risk has to be very, 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 very low. But if the inherent risk and control risk are low, then your detection risk is automatically, at a moderate level. Objective number 2 is implementing an effective and efficient audit approach to address, the risk of material misstatement. This is a famous decision tree. How do we arrive at the level of procedures? So obtain an understanding, as we discussed, and performing preliminary review, performing risk assessment at the financial statement level, and then performing risk at the assertion level, and overall audit procedures taking account of pervasive risk under 330, and for assertion level, design and perform further audit procedures which include test of controls, substantive procedures, and substantive procedures contain analytical procedures as well as test of details. For a pervasive audit process at a financial statement level, what we need to do in terms of response, professional skepticism. I think this is very important. It is good to rely on what you have been briefed and informed by the client, but you should always have a critical eye to it, actually, because taking everything at the face value may not be the right approach. You should be aware of the environment in which the company is operating. You should be aware of the trends of that business in the past, and you should be in a position to correlate what has been informed to you or what has been shown to you vis-a-vis that environment in which the company is operating. Level of staff assigned is very important, because if the business is complex, let's say if it is a NBFC or a bank or a financial institution, you have to make sure that the people which are forming part of the team, they have relevant experience, they have been trained. For that matter, insurance is also a very complex sector, not so much in India, because here we do not take a lot of responsibility which auditors in the foreign domain or developed countries domain do consider. For instance, in insurance, we do not issue an opinion or probably on the actuarial reserve. We say that has been taken care by an appointed actuary, and we have relied on their conclusion on their certification. Having said that, we still have to challenge or maybe evaluate the assumptions or appropriateness of the assumptions. For that also, there is a reasonable amount of understanding and training is required. So level of staff assigned is very important. Ongoing staff supervision is very important, because if you have given, let's say, 6 weeks of time to your team to complete various tasks within the audit process, and then you only go at the 6th week to review what they have done, then probably you will be missing the chance to revisit your audit procedure. And if something has not been done, probably you will not be in a position to conclude that process in the given available time. So ongoing staff supervision is very important. Evaluate accounting policies, goes without saying, whether they are compliant with the accounting standard, they have been consistently followed. if there are any exception which has been taken vis-a-vis last year, what is the justification, what is the financial impact, how it has been accounted for, how it has been disclosed. Nature, extent, timing, and unpredictability of planned procedures. This is very important actually, that certain procedures you should do in the interim, certain procedures you should do only at the year-end closing time, maybe after the year is closed. With respect to cutoff procedures also, many a times we only ask for the last 3 invoices for the cutoff, or whether it is revenue or it is last purchases. You should have some element of unpredictability in your sample or in your audit procedures, so that you may not be the client may not take advantage of that predictable audit procedures, and they make sure that the last 3 transactions are perfect, but last 7th transaction is something which they would have played with, and probably you may not be able to detect that in your audit procedure. So the result of all this tree is that the sufficient appropriate evidence is available, which reduces the audit risk to an acceptably low level. Which are the essays which deal with the risk assessment are essay 300 to 499. 300 we have planning and audit of financial statement. 315, which has been covered by the previous speaker. 320 is materiality in planning and performing an audit. So materiality is also very important, and that's how you when you say risk of material misstatement, what is material? I think that guidance you get from 320. 330 is the auditor's response to assess risk, which we are covering here. 402 is audit consideration relating to an entity using a service organization. So if your payroll is outsourced, if your billing is outsourced, if your collection is outsourced, if your AP is outsourced, then probably you are using service organization, and then probably you have to follow the audit consideration as given in SA 402. Last but not the least is evaluation of misstatement identified during the audit. That is governed by SA 450. So these are the standards which cover the risk-based audit approach. Now coming back to 330 and coming back to the responses, as we have gathered, and I would not read through this, 330 deals with the responses which are important or necessary to address the risk which has been identified in your process of risk assessment under 315. Objective is to obtain sufficient appropriate audit evidence to be able to issue an opinion that financial statements are free of any material misstatement. Effective date is the same as 315, though we have a new 315 has been issued globally, which has been made applicable also. The Indian version of that has also been issued for public exposure. Draft has been issued for public views and opinion, which have also been received. And the institute and the board is working on that, and they'll be soon issuing the new version of 315. So what are substantive procedures? Substantive procedures are a combination of test of details and substantive analytical procedures. Test of details include class of transaction, account balance, and disclosures. How do we test details? That depends, on the nature of transactions, homogeneous, heterogeneous, and maybe the quantum of transaction. If it is a large long-term contract company dealing in very large contract running into 3 to 4 years, and the revenue is contributed by, let's say, 2 very large contract, 90% of the revenue comes from that. And if you are able to evaluate the risk and challenges and performance obligation in those contract in really well manner, probably your test of detail your documentation for test of detail will look very different. On the contrary, if there is a company which is in a product sales, and thousands of products are sold which are homogeneous, or maybe a class of products which are sold, then you will have to apply the sampling tool, and accordingly you will have to you'll have to select the sample which will be necessary for you to conclude the test of details. Test of controls, it comes before you decide the extent of substantive and test of procedures. So if the company has set up robust control environment. And if you want to place a reliance on that, because if you have in your past you have seen that those controls have been designed and have been implemented in very effective, robust manner, then you'll have to do a test of controls, starting from the design and then to existence and effectiveness of that. And if you conclude that you can place a reliance on controls, the reliance can be high, can be moderate, can be low. All these three levels of reliance on test of control will increase the extent of substantive procedures. So if you want to place a very high reliance on test of controls, then perhaps your substantive procedures might be a little less. But if you want to place a very low reliance on test of control or controls, then you will have your substantive processor, your test of details will increase in terms of number of samples and number of transactions to be tested. So requirement of SA 330 is overall response, audit procedure responsive to the assessed risk, adequacy of presentation and disclosure, evaluating the sufficiency and appropriateness of audit, documentation. So if you really look at 315, we move on to SF. I'm just trying to give you the concept, and there's nothing new, so I'll move on to the next slide. Overall response to address the assessed risk of material misstatement may include emphasizing the audit team to maintain professional skepticism. This also have covered in the previous slide, so I'll not much. I think this is the same which we explained in that diagram. I think that was quite comprehensive, which I covered, but very quickly. Making general changes to the nature, timing, and extent of audit process, such as performing substantive process at the period end instead of an interim date, or modifying the nature of audit procedures to obtain more persuasive audit evidence. As I gave you the example in case of a contract where you do not get enough comfort by the way the controls have been established, you might go out to the third party who has signed the contract and ask for certain confirmation and validation of the key terms of the contract. In designing the audit procedure, consider the reason for the assessment given to each class of transaction, account balance and disclosure, likelihood of material misstatement, and whether the risk assessment takes into account the relevant controls. Obtain more persuasive audit evidence, the higher the auditor's assessment of risk. Test of control we have covered, but I'll just quickly, there is an exception that the controls are operating effectively. Substantive process alone cannot provide sufficient appropriate audit evidence at the assertion level. So, while I said that you don't want to place a reliance on internal controls and then you will increase the extent of substantive procedures, but it is very likely that even if you do a very extensive substantive procedures, even then you are not able to obtain appropriate and enough audit evidence to be able to issue an opinion. In which case you will have to maybe either qualify or give a disclaimer that because of these limitations and the quantum of transactions and maybe multiple locations, it was not possible to gather or obtain enough audit evidence, and you may not be in a position to give an opinion which is clean. So control environment is very important, and probably control may be not necessarily automated. It would be physical manual controls also, and if they are working operating effectively, it becomes easier for you to complete your substantive procedures in the manner which will help you to demonstrate that you have been able to gather enough and appropriate audit evidence to be able to give the opinion which you have given. So perform the audit procedures in combination with inquiry to obtain the audit evidence about operating effectiveness, application of control at relevant times during the audit period. So consistency of the application and by whom or means of application. So if the company has changed certain controls maybe during the year, then your audit response to that control environment will be different for two different periods. Let's say certain set of controls were operating in the first 6 months of the year, and they have brought in certain new controls, or they have changed the environment in which these controls were being implemented. Earlier, 80% of the controls were manual. In the second half, all the controls became automated, or it became the reverse, 80% control became automated. Then you will have your response to those two periods will be different. So you can't have one audit approach to or maybe to address the assess risk in two different control environments. So within 1 year, within one company, within one audit client, you may have two different audit approach to address the control environment in which this company, the client, was operating in various periods. Types of control tests, I think that had been covered by previous, but I'll quickly talk about this. Inquiry is a very basic process: observation, walkthrough, examination, reperformance. So if it's an automated control, and you want to test it whether it is working effectively, also you can do a test transaction, of course, in the test environment, not in the live and production environment. You have to do that in test environment, and if the result is produced which has been which has been which helps you to validate the type of control or the nature of control, then you can accept that control. Inspection and computer assisted audit tools. In this environment of automated control, we have to use a lot of IT, and that's why this 315 has been revised, because earlier 315 was not talking so much about the IT environment or the automated environment, but this 315 help you to understand the risk in an automated and IT environment in which the current business is operating, and probably you can have adequate responses accordingly based on the risk which has been assessed. I think we have discussed. If the company has changed the control environment, you have to make sure your audit response is adequate. Can we use the audit evidences obtained in previous audits as evidence for the current year? I think the answer is not simple, which inculcates or revolve around 2-3 things. The effectiveness of other elements of internal control, including the assessment, the risk from the control characteristics, manual or automated, general IT control effectiveness, and control effectiveness and its application, including nature and decision in the application in the previous audit. Is there any personal changes which may affect control application? So the earlier person who was running one control was super. He knew what to do. He was fully aware, how to manage that control, how to disseminate awareness of that control amongst the user or that user group which needs to be controlled in that environment. And he was making best use of that control environment. But that person has changed. There's a new person which is still grappling with the environment. Then probably you might have to take another call. How do you do that? If lack of change in a particular control poses a risk due to changing circumstances, so so this risk matrix has to be assessed every year, at least, if not more. Whatever risk you have identified in your business, and you have put a control to address or mitigate those risks. There might be a situation, to cover one risk, you might have 3, 4, 5, 6, 7, 8 controls. There may be also a case that one controls can cover 2 or 3 risks. So these combinations are possible. But having said that, you have to assess the appropriateness of your risk and the control environment which has been established or instituted to address those risks every year. And if you feel that there are certain new risks which have emerged or which have been identified, and you have not taken enough cognizance of those risks in your control environment, then the audit risk obviously multiplies, because then you have to increase the extent of the substantive procedures, and accordingly the time required and the response required will change. So controls over significant risk. Any significant risk in auditor's opinion should be tested in the current period. During this process, evaluate whether there are any misstatement detected by substantive procedures that indicate the control are not operating effectively. If there are deviations, the auditor should understand its potential consequences through specific inquiries and determine. So if test of controls performed to provide an appropriate basis for reliance, if an additional test is necessary, and if the potential risk of material misstatement is to be addressed using substantive procedures. What are the substantive procedures? We have talked about that, irrespective of the assessment of material misstatement, the auditor has to design and perform substantive processes for each material class of transaction, account balance, and disclosure. This position has slightly changed in the revised 315, which you will come to know later, but because there are some new concept and new approaches has been identified, which we'll talk about maybe in some future session. The auditor shall consider whether external confirmation procedures are to be performed as substantive audit procedures. So, while sending external confirmation, independent confirmation for banks is something which is integral, which is very important procedure. But you might have experienced that if you are sending an external confirmation to customers, so maybe top 30 customers, top 50 customers, or whatever criteria where you feel that you're covering a significant risk by floating these balance confirmation, but you don't receive confirmation. I think in the last 3 years, you have done that every year, but you don't receive confirmation. So, then you have to make sure that your alternative procedures are substantive enough to cover that risk for which you had sent those external confirmation. Because many a times, especially in those companies which are operating with government or quasi-government customers, you hardly get any confirmation from customers. Then how do you perform your audit procedures to address that risk which might still be there, in that balance which has been shown as receivable or recoverable from your customer? So that's very important. Closing process remains very key. Journal entries, there are tools now to test journal entries, and this is a very key process for fraud testing also, as we would have discussed in some of the other sessions when 240 would have been covered. And response to a significant risk that are specific to test significant risks are to be performed, and procedures to include test of details. Timing, as we discussed, so, it should some procedure should be done in interim, some should be just necessarily done at the closing or at the year end. Adequacy of presentation, you have to evaluate whether the overall presentation of the financial statement, including related disclosures, have been made. Any material transaction which is important for understanding of financial statement, whether it is exceptional in nature, should it be classified as exceptional so that the P&L impact is clearly identified out of that item. All those assessments have to be done. All the disclosures have to be in the framework in which the financial statements have been prepared. Evaluating the sufficiency and efficiency of the audit evidence. Before the conclusion of the audit, the auditor should determine whether the audit procedure performed and audit evidence obtained is appropriate for the assessment of the risk. An auditor should consider all relevant evidence, regardless of whether it appears to corroborate or contradict the assertion. This is very important. So many times what we do, we try and see that what evidence is supporting, the assertion or the financial statement level disclosure, and we only consider that. And if we get an evidence which is to the contrary and giving a doubt whether we are doing the right disclosure, I'm not saying that we do that, but it is likely that we discard that, because that creates, a suspicion. So it is important that we consider both the audit evidences carefully and accordingly prepare our responses to that, and accordingly we conclude on the opinion whether these are corroborating with the assertion or contradicting the assertion. For instance, if you ask for a balance confirmation from a supplier, and then if you're fortunate enough, you get one, and then you see that the balance, let's say X, where the supplier has confirmed X plus 50%, let's say 150%. And if you don't take cognizance of that, then probably your audit evidence and audit procedure is not complete. So you have to take cognizance of both, which are corroborating with your assertion and which are contradicting your assertion, and accordingly prepare your response. So if I give you this example by a tree, so sufficient and appropriate audit evidence has been obtained by the auditor. Yes, conclude and form an opinion. No attempt to obtain further audit evidence. Yes, conclude and form an opinion. No, either express a qualified opinion or a disclaimer of opinion. So this is what the broad topic of responses to audit risk is. Of course, the time which was available was not enough. Otherwise, we can go in detail for each and every aspect. Documentation is of the key importance, very important. I think in old days when I was doing my articleship, most of the document was in the minds of the partners. Actually, they were having encyclopedia in their mind, and they knew everything about the client, about the financial statement. Every number was and the procedure which they would have done, what kind of evidence they have obtained. Everything was in their mind. But which is not enough, because what does documentation mean? Documentation mean that whatever the conclusion which you have done on an audit, your file should be self-speaking. And what does that mean? If a reviewer comes, maybe external, internal, or a regulator, and if they look at the file, they get the answers from the documents which have been put in place for each financial statement level risk or assertion level risk, and the audit responses which have been which have been uh, 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 which have been given or which have been conducted to address those risks. Actually, if the file is not self-speaking and you need to sit somebody to explain each and everything, then probably the documentation may still be there, but it is not comprehensive and lucid enough to give comfort to a reviewer. So overall, a response to address the assessed risk of material statement at the financial statement level and the nature, timing, extent of further audit process performed, linkages of those procedures with the assessed risk at the assertion level, the result of the audit process, including conclusion for unclear ones, and if the audit evidence about the operating effectiveness control obtained in previous audit is used by the auditors, such facts should be documented. Auditors' documentation should demonstrate that the financial statement agree or reconcile with the underlying accounting records. So that is all. I'm happy to answer any question which you may have. I know it was a quick session where I covered a lot of things, but I'll be happy to answer the question which the audience or the participants may have. Thank you. Mansi, am I audible? Mansi, Isha, Shubhamji.
Thank you so much, sir. Thank you so much, Rajiv, sir, for this successful and impactful deliberation on SA 330. I would request the co-moderators to ask the questions, if any. I'll start with my questions then. What is the difference between a significant risk as identified by SA 315 as compared to the concept of key audit matters identified and considered for audit as per SA 701? Whether all significant risk qualifies automatically as key audit matters or vice versa?
I think this question was debated when the key audit matter standard was introduced a couple of years back, and I think we were all into a dilemma, and we all learned from our own assessment. And when we were first reporting on key audit matters, we were referring to a lot of CAM reporting in with different sectors, different industries across the globe. So I think we have to follow a funnel approach. So you have a lot of significant risk. For that matter, revenue always remains a risk because there is a risk of fraud, though it is rebuttable, but this always remains a risk. In case of some companies may have serious litigation, which can always be a significant risk, but you have to really do an assessment where those significant risks or those risks where there's a lot of judgment and has been used, or maybe assumptions have been used to arrive at the conclusion. These judgments may vary from time to time. They may change, from year on year, depending on the circumstances in which those assumptions are made, or assessments are made. So it's a really, I would say, very complex and critical process where you use a funnel where you put all the significant risk in one funnel, and you see which are the one which are a standard risk. Maybe they are significant, but the controls around that, or there are industry trends available. So we can live with that. And those which are very specific to that industry or that client, where there is a significant judgment involved, those become a key audit risk for the purpose of reporting under CAM.
Sir, I would also like to ask a question on behalf of the people which you have received.
Sure, sir.
That how should we identify and assess the risk of material misstatement, either it should be restricted at the level of financial statements only, or should it be need to go beyond that, like for business organization nature or research resources nature, like range of reputation of the supplier, etc., etc., sir.
So for the purpose of risk assessment, I think the risk is assessed at the two level, as we discussed in our deliberation today. One is at the financial statement level, which Ruchi ma'am has covered. The other one is at the assertion level. So assertion level, as we all know, completeness, existence, valuation, and all those assertions are. You are talking about something which is going beyond, the optics. So if you have a
Yes.
set of suppliers, which and that comes from the your knowledge of the environment in which the company is operating. The key suppliers and their behavior, which is available in public domain. So those risks are there, and that will definitely increase the audit risk. For instance, if there is a contract with a supplier, which where you have in your past experience have identified some serious issues, maybe in terms of quality of supply, in terms of integrity and stuff like that. Probably you would like to be very careful while dealing with that contract. You might get independent confirmation from that supplier itself. You might like to see, what are the key customers which are being dealt by that supplier. So these are very special audit consideration which might come into play, as was covered while risk assessment by our previous speaker. So these are special audit consideration situation where you have to go beyond your standard procedures and perform some specific audit procedures.
This is
One
Ruchi.
more
Can I
question,
just
sir.
add on to it? Sorry, so Rajivji, I think very good. You've really explained, but I just wanted to add two bits of my thoughts on it.
Please, please.
Actually, I just wanted to say that here, when you decide that what has to be at a class of transaction level or maybe at a financial assertion level, will depend on the nature of the risk that you're looking at. That act of your decision.
Ruchi ma'am, we lost you for a couple of seconds, so if you may please repeat what you just said.
Oh, I'm so sorry. Yeah. So I was just saying that it actually depends whether your account balances that you're looking at and whether how much is that material to the overall financial statement level. So some review that you may do may be both at an account balance level and also at an financial statement level. So that decision has to be made based on the criticality and significance of the risk that you are evaluating. I hope that.
One more question I'd like to ask, ma'am. That do all the companies having same risk assessment commensurate with their size of their organization, or it is a different criteria for depending on the size of the company?
Sorry, can you come back again? I think I'm having a bit of a network issue.
Yeah, ma'am, I'm asking the question that do all companies have similar risk assessment or they have risk assessments different as per their size of the company, commensurate with their size of the organization?
Yeah, so the risk, good question, and I think, right. So the risk assessment can't be same. Your risk assessment procedures can be same, which means you can do either inquiry, observation, analytical process. That could be the same. Risk assessment will be different for everybody, for every company, I meant to say. It will depend on the size, magnitude of the company. It will depend on the sector that the company is in. It will depend on various parameters
And we lost you. We lost
For
you.
example, you're based only in, you're a one-shop entity. I'm sure you understand. Hello, can you hear me now? Hello,
Yes,
am
ma'am.
I audible?
We
Yeah.
are
Now
losing
you're
you. We are
audible.
losing. I think there's a
Yeah.
network issue. Yeah, we're losing you in between.
So I think what
Right.
Ruchi ma'am is trying to say that within the same industry,
I
of course, risk assessment will be different or maybe different from industry to industry. From maybe within the same industry, it may be different from a company which is smaller as compared to a company which is 10 times the size. Within the same industry, if there is only one plant and they have multiple plants, multiple supply chains, so there'll be a lot of factors on which the risk assessment will vary from business to business, from company to company, maybe within the same industry.
So, I have hi Rajiv ji, I have a follow-up question based on this very question itself.
Yeah, sure.
So how do we, estimate the inherent risks while we audit a startup? Because it's been coming up, especially in NCR. A lot of companies are now getting into equity investments. So as auditors, when we get this opportunity as a practice area, what are the kind of risks that we should keep in mind? Because there's a lot of inherent risk as well when you delve into something like a startup.
That's true. So inherent risk in a startup, depending on which sector, if it is a SaaS-based company or a fintech, or will definitely be higher than a normal business. So inherent risk in a startup, if you are classifying or if you are identifying that as a low, I think I have to really look at that assessment. When you do that, so it's definitely going to be on a moderate or to higher side. So that checks one box. Now you have to see, and in most of these startups, the control are not really there because they are so busy
Yeah.
in building their top line or network or for that matter, brand recognition, brand value creation and stuff like that. They never bother about control. So the control risk also most of the time is, especially in 1 or 2 years of their existence, is really not there, and it is high for sure. Maybe moderate sometime, but many a times high. So if the inherent risk and control risk both are high or both are moderate, then your extent of procedure, your detection risk has to be really low. So you have to be very careful. Sometime the size is not, if it's a pre-revenue, probably your risk is less because there is not much on the financial statement which will let you issue an opinion which is actually not correct. So depending on which stage they are, it will really depend on that.
I think especially after what happened with Paytm as well recently, something as simple as not validating or having a control procedure for, checking the KYC of customers can also have an impact. So I think this becomes a very important factor for all of us who are either employed or practicing in audit, that any and every function in DI and OE, is important for us to evaluate the operating effectiveness. Thank you so much, sir,
Certainly,
for
certainly, you're right.
In a startup, I would just like to add that you will have to look at risks which are beyond finance. So, some operational procedures or the kind of climate in which they are working in actually also needs to be evaluated when you're doing your risk assessment. So the risk of excess usage of debt, as an example, is also something that needs to be considered while you're doing the risk assessment. So non-financial aspects are very, very key for a startup to be evaluated.
Got it. Got it. Thank you so much, Ruchiji. I would request Isha, if you have any questions, please go ahead.
Yeah, I have some questions. The first is, are AI and IA, intelligent automation, helpful in identifying and assessing the risk of material misstatements?
So I can take that. See, artificial intelligence is just a mechanism again, and I think I have mentioned that a lot to people that AI does whatever that you explain the system to do. It will not create something that will come out of the world, right? AI is as intelligent as you make it intelligent. Okay. So if you actually create a program which will help you detect that, then definitely it will do. But end of the day, in risk assessment, as we all know, there's a lot of aspects on judgment that's required. The significance, materiality, the overall environment. So there are multiple factors. So AI can help you give the items. Now, as an auditor, you will need to assess whether that is significant. What is your judgment saying? When you put two things together, do you feel a compensatory or a supplementary control is there which can kind of shield you from that risk? So AI can just be used as a tool, but it is not the end objective, is how I take it. I can let Rajiv ji add on
No,
his
I think
thoughts.
this is spot on. You have covered it very, I think, comprehensively.
Okay, thank you so much. The next question is how to respond risk related to non-disclosure of pending legal cases by the client.
How to respond to?
Respond to the risk related to non-disclosure of pending legal cases by the client.
Yeah, so I think there is a process because while you have to have a very comprehensive discussion with the legal department, with the legal head, but sometime that is not enough. So you have to make sure that you have floated independent confirmation to all their legal counsels who are helping them on that litigation. Many a times you get to know of some very key litigation or key matter which has not been brought to your knowledge, but when you receive a confirmation from your lawyer or their counsel, then you come to know there is something on this matter is also under adjudication, and which is at a certain level of jurisdiction, maybe at high court or so I think other than there are two, three things. One is, substantive processes around litigation is scanning through the professional fee. So if you are making payment of fee to, let's say, the top law firms, and without any prior payment track to such lawyer, and you identify a large payment made to, so that should give you a suspicion in your mind. So your skepticism should come into play, and then you should start inquiring about that, and then probably try and seek a confirmation from the law firm which is representing the client in that specific matter to see, what is the risk which has not been shared with you, or which has not been kind of put on table for your assessment for its financial implication and disclosure. So that's a tricky area, and you have to be really on your toes.
Thank you so much, Rajiv sir, for explaining in such a wonderful way. Now, I would like to hand over this thing to my co-moderator, Mansi, to ask a few other questions if she has. Mansi, over to you.
Yeah. Thank you so much, Isha ma'am. I would like to thank both the expert speakers for their impactful presentation and their time they have given us. And now I would like to extend my heartiest congratulations to Anil Lal sir for ensuring successful execution of this webinar. And I would request him to conclude the webinar.
Mansi ma'am, on behalf of AASP of ICAI, I extend my heartiest thanks towards both these speakers, C. Rajiv Saxena ji and Madam Ruchi Maheshwari ji, for their wonderful presentation. Ruchi ma'am has covered all the aspects of SA 315, as Rajiv sir said, in a very lucid manner, as with the full of examples, covering the latest examples. So thank you so much, Ruchi ma'am, for explaining our members regarding SA 315 with the full of case studies, as well as C. Rajiv Saxena ji with the various examples. You have covered SA 330 and enlightened all our members about the various intricacies of SA 330. So once again, on behalf of AASP of ICAI, I extend my heartiest thanks towards both these speakers, as well as all the four moderators, C. Vipin Kumar Khatri ji, Madam Mansi Goyal ji, C. Isha Garg ji, and C. Shubham Garg ji, for spending their valuable time and moderating this webinar in a very successful manner. And thanks once again all the four moderators for giving their precious time for our today's webinar. I also thanks all the participants of today's webinar who have joined this webinar in this evening. So once again, thank you so much, Rajiv sir. Thank you so much, Ruchi ma'am. Thanks, Shubham ji. Thanks, Mansi ji. Thanks, Isha ma'am. Thank you so much.
Thank you so much.
Thank you so much. Good evening.
Thank you so much, sir. Thank you so much. Thank you.
Namaste.
Thank you.
Namaste.
Namaskar.